Welcome to today's market report. European stock markets traded low on Friday, ending a generally positive week on a cautious note amid concerns that growing COVID-19 cases will stunt economic growth. DAX in Germany traded 0.8% lower, CAC 40 in France fell 0.8%, FTSE 100 in the UK dropped 0.6%. UK retail sales only grew 0.3% in December, weaker than expected, as retailers struggled to recover in the crucial holiday period from a partial coronavirus lockdown the previous month, marking a weak end to their worst year on record. Additionally, the Eurozone composite PMI, which fell to 47.5 from 49.1 in December, suggested the region was struggling to show any economic growth in the first month of the year. This follows European Central Bank President Christine Lagarde warning Thursday that ever-increasing COVID-19 numbers and restrictive measures such as lockdowns to curb the spread of the virus could challenge the region's economic outlook. Lagarde also indicated more clearly than ever that the ECB would not use the full amount of its cheap bond buying program if it doesn't need to. European governments are having to cope with the surging COVID-19 cases, with Britain, for example, posting a fresh record in daily death on Wednesday for the second day running. Equity markets have posted strong gains so far this week, reflecting relief over an orderly transitional power in the United States and strong expectations that US stimulus will provide continued support for global assets. In corporate news, Next stock fell 1.9% following a report that the UK retailer has withdrawn from the bidding for rival Topshop on price considerations. Siemens stock rose 4.1% after the German engineering company said the results for its fiscal first quarter were broadly ahead of expectations, and it would have to review its guidance. PRISA stock rose 6.3% after Vivendi said it will buy a 7.6% stake in the Spanish media conglomerate. Oil prices weakened on Friday on concerns that a rise of COVID-19 cases in China, the world's largest importer, will severely impact demand, given the reintroduction of restrictive measures. Shanghai reported the first locally transmitted cases in 2 months on Thursday, while Beijing is now urging tens of millions of urban workers not to travel back to their largely rural families during the upcoming Lunar New Year holiday. Crude futures traded 1.5% lower at $52.35 per barrel. Brent fell 1.3% to $55.38 per barrel. Gold futures fell 0.2% to $1,861.40 per ounce. On the FX front, the downbeat UK preliminary factoring and services PMIs exerted additional downside pressure on GBP/USD as the major refreshed daily lows at 136.55. The spot shares 0.49% on daily basis. The pair has been falling from the highs as free dark clouds hit sterling, but President Biden's economic speech and accelerated UK vaccination campaign may boost sentiment. Britain's hospitals have been struggling under an ever-growing flow of patients, and easing restrictions may come later and be extended. These concerns have been weighing on sterling, alongside two other developments. UK retail sales rose by only 0.3% in December, far worse than expected. In the US, Republicans seem reluctant to back additional spending, while Democrats have room to move forward on their own. Support from the opposition would ensure a large package and a quick delivery. Biden is slated to deliver a speech on the economy later on Friday. The president may either go for quick and small wins, pushing non-controversial issues in early February, or aiming for the larger package. The latter would take time. Markets would like to see more funds, and the sooner the better. The safe haven dollar would drop when markets rise and fall if they return to gains. Britain has already administered jabs to around 7.5% of the population, but has yet to reach the target rate of 500,000 inoculations per day. Any acceleration would be welcome. Some resistance awaits at 136.80, which capped the pair in early January. It is followed by 137.20, the previous 2021 peak. Support is at 136.20, which was at a stepping stone on the way up, followed by 135.25, a cushion seen last week. Eurodollar was fast approaching the 122 level on German PMI readings, whilst the dollar was up 0.1% at 90.243. This is today's market news. Thanks for listening. We'll see you next time.